pointed out yesterday was a big support level in the S&P 500 was between these two horizontal white lines here, right? Remember? 1605 down to 1595 right in here. Look at where the market dropped yesterday. Beautiful, beautiful, beautiful. Market dropped down to 1596.5 before staging a huge rally. Once we hit this bottom, we just rallied and we are up. Look at this right now. The S&Ps are up at 1631, folks. 1631. I told you that there would be a big move occurring down at that level, that this was a huge support level, right? And again, these lines were drawn from the low of this gap right here. Remember, the market gapped higher and continued moving higher without any, without trying to fill that gap at all. So we took the low of that day right here of that gap, and then the high, the yearly high, the all-time high up until that point right in here, and drew it out. Now, the jobs report came out this morning. The numbers were, what, 175,000, which is very positive. And the market's up big time again. Market gapped higher, and we're moving higher right now. So, but what I want to do now is I want to take you to an intraday chart and just show you some just classic trade setups that you can learn from and start applying immediately in your own trading. All right, here we go. This is a 3-minute E-Mini S&P 500 chart, and again, this white horizontal line right here represents the 1605 area, and this line right down in here represents really 1596.5, which is the low of the day because it won't go any lower than that. But the market opened up at my upper support line between the two lines on the daily. Okay, market rallied up, and as the market rallied up, I was looking for the market to sell off at a logical resistance area. So a good area to short this market was at the daily pivot, about 1614, a little lower than that, with an initial stop loss, okay, above the prior day's, what I like to call active high, which is a somewhat significant high carried from the prior day. Okay, this is the prior day's low right here. Okay, rallied up to this high, came down and took out the prior low here, which made this high right here significant. So as the market was rallying up into that 50 exponential moving average, this hot pink between the 50 exponential and the 200 exponential moving average, and then finding out and seeing that there was a daily pivot number here, you could have shorted it up in here, anticipating that the market would come back down and try to at least retest the low of the day, which it did. So what the market did was it fell down into that zone. It started filling that gap, right? The 1605 down to the 1595. That 10-point spread was, the gap in which I was expecting for the market to fill. And then I was looking for any reason to be looking to buy, because I just knew that there would be a bigger move coming in these levels. So since there was a daily support number at 1599.25 right in here, I'm not going to buy automatically as the market's falling out of bed here. What I'm looking for is I'm looking for the market to start to settle down and to give me some type of price pattern so I can enter the market with a very logical stop based on that price pattern. So look at the market came down right here, hit the 1596.5, bounced up, and then at this point, as the market started dropping back down towards trying to retest this low, I was looking for a reason to get long. I was looking for a pattern. And one of the patterns that you see me talk about all the time, is that inside vertical bar, right, where the market is contained from the prior bar's range. Okay? The prior bar's range. So the high is lower than the prior bar's high, and the low is higher than the prior bar's low. Okay? So this is, look at what we got in here. We got an inside pattern right here on this bar right here. And that high was actually higher than the daily S1, which is perfect. So I had a very, very low risk trade setup starting to occur. Okay, look at, see? You get a lower high and a higher low. So the actual entry came in as the market took out that high at 1,600.5 to 1,603.75, and as you can see, the market was off to the races. Once it took out this high at 1,603.75, the stop loss was below these double lows. So I was risking less than 3 points. In this trade, I knew had the potential to really run to the upside. And as you can see, the remainder of the day, the market did nothing but rally with higher highs and higher lows. Now, granted, the bars, the first 3/4 of the day, they were all red, denoting downtrend, obviously. But remember, this is considered a counter trend trade, right? Remember what counter trend? Counter trend means against the current trend. So just because the bars are red doesn't mean you can't go long if you got the appropriate trade setup. So you did. So for those of you that are more conservative, you'd wait for the bars to turn green. They turn green right in here, and you'd be waiting for pullbacks to get in, and you got a couple here. All right. So just real quick, I want to flip back really to the, let's see, let's flip to a gold chart. Okay. Remember, we've been long this for about a week now. I've got my stop at on GLD, the ETF of gold, at 133.69. Okay, 133.69. The market misses by about 10 cents. So it's pretty much a break-even trade at this point, okay? So I'm at 133.69 there. Look at gold, TBT, the interest rate play. Look at how the market came down yesterday and dropped into beautiful, beautiful, beautiful support. So you're going to measure from this huge swing up. Look at where the market dropped down to, right? 38.2% retracement, which got us a good trade yesterday, right here. And then we've rallied quite a bit. So this is a nice trade so far. Went long here at 65.32, right smack dab at the 38.2% retracement between the mid to the lower band. And when you measure this swing from this low to this high, it's a beautiful fib, right? 38.2, which happens to be smack dab in between the mid and the lower band. So this is a nice trade to the long side right now. All right. So again, just to take you back to the daily E-Mini S&P chart, the market did exactly what I was talking about yesterday on the video. Refer back to yesterday's video. The numbers that I gave you and what I was expecting to happen. Remember, look at the 50 exponential moving average, right? Look at when it hit last time. Got the big run, right? This pullback's bigger than the prior two pullbacks. Right back to the 50 again. Back in filling this gap and bouncing like a charm, right? We were also looking for the jobs report to come out, and it was 175,000, which was a good number. And the market, as you can see, is gapped, and we're rallying. So if we go just real quick to an intraday chart, look at the market is gapped higher today, right? This is where it closed. This is yesterday's high, opened up in here, came down, tried to fill that gap, and now we're up through the high of the day, which is telling me that the market wants to continue going higher, okay? Again, the market opened up higher, came down, tried to fill that gap, came real close to filling it, and then boom, right back up. We've got a V, right? Down and straight back up, took out that high. So I suspect this market will continue moving higher. Again, if you're day trading, you've got to be nimble, right? I mean, one minute you could be bullish, and the next minute you could be bearish. So you want to be, able to flip back and forth. But right now, it's definitely bullish, and you want to be buying those pullbacks. Hope that helps. Have a great weekend. Talk to you on Monday. Bye for now.